Hey traders, Raghee here, and in this free recap video we're going to talk about what we have coming up tomorrow, and that is non-farm payroll. Now, for those of you that have been following along over the past few weeks and months, you know that we are in that D stage of the economy that I've been talking about for so much, and after a year end, and I would say a bulk of this was probably rebalancing, maybe a little bit of opportunistic bottom picking, but after a late December rally, we finally made it back to resistance levels that the market has had a lot of difficulty getting above. And a look into tomorrow means we're talking about non-farm payroll, but not just NFP. We're talking about probably what could be an even more significant market mover, and that is Fed Chairman Powell speaking at 10:15 a.m. Eastern. Now, if Powell gets a good non-farm payroll, and that means that his current, and not just his, the FOMC's current hawkish stance has some legs, data to stand on, he probably won't feel the need to budge from the current FOMC somewhat hawkish tack they're on. Now, if that data is weak, he could dismiss it. Certainly, he's dismissed a lot of CPI and GDP data, and he certainly could dismiss something as near term as a monthly employment number. But remember, the FOMC has a dual mandate. They have for, dating back to the Bernanke years. It's a dual mandate of jobs and inflation. Well, one look at the crude oil and 10-year bond, anybody could look at these two, and when you juxtapose the 10-year bond and you juxtapose crude and you look at the trend in both, it's very difficult to make a serious claim that the U.S. is on track with inflation. Quarter over quarter, it's been a mess. In fact, inflation in terms of non-core CPI peaked in July and has been falling ever since. So again, we're looking at a month-over-month or quarter-over-quarter trend, or what's known as a rate of change. And that trend is what we're keying in on. Now, that trend is also what Powell seems to be ignoring. Now, there's a few other things that we have that we're watching. One is just a lot of short positions in the S&P, the NASDAQ, as well as Microsoft, UNH, United Health, Amazon, Facebook, and then a slew of ETFs, starting with the XRT, the retail, going to the energy, XLE, looking to play on what's been a very weak Chevron and Exxon, as well as looking for a resumption of the downtrend in crude, and then XLF, capitalizing on more weakness coming out of financials, JP Morgan, Berkshire. Now, this one's going to be tricky as we go into earnings here mid-month, but this is what we're looking at. Now, what I want to give everybody a quick heads up on, and it's not the non-farm payroll at 8:30 that's got me as concerned. Again, 8:30 a.m. Eastern, although the market might really have an exaggerated reaction to this, because if the number is a miss, if the number misses the expectation, expectation could be that bad data, a miss, is good for the market, because that would then suggest that the FOMC needs to back off their current hawkish talk. So bad data in this environment could be somewhat good for stocks. Again, just kind of generally talking about what data means when it's juxtaposed against what the FOMC might be looking at. Now, the real time that I want everyone to keep in mind is 10:15. And, most people will look at a price level, right, to get in or get out of a trade. And this is where I want everyone to think about what time could mean to their trade. Not price, but time. If at 10:15 Jerome Powell decides to change the tone and perhaps even the way in which the FOMC might communicate what they're going to do with rates starting as early as the meeting this month, then we could see the equities markets really rally. And since I am short, again, many markets and many individual stocks and ETFs. Since I'm playing this bearish trend, one thing that it would behoove me to do after having a great day, I mean, we've been short since yesterday, up near 2,500 on the S&P, and actually up near 6,400 on the NAS. One thing that might behoove me to do is, while we get closer and closer to 1015, tighten the stops, right? I'm at a break-even stop now, as are the Simpler Futures members, but tighten the stops and start to maybe protect more of the unrealized profit by backing off by maybe half of the daily price movement range, or backing off to a nearby major psychological level, like say 6,300, maybe even 6,200, depending upon how tightly we want to trail. So these are some of the things that we're looking at for tomorrow. Hope that helps, kind of showing you what my plan is with the current trend that we're playing and the current positions that we have open. And again, keep an eye on these events, because especially when it comes to the FOMC and Jerome Powell, as the market waits with bated breath, the bulls, not I, but as the bulls wait with bated breath for whether or not the FOMC is going to throw the market a lifeline. Look, I think no matter what the FOMC does, be aware that we are in a D stage of the economy. That does typically mean we're going to see the kind of price action that we are seeing. So keep that in mind. I don't know that the FOMC alone, saves this market from potentially lower lows or takes it permanently out of this downtrend. I know it may not be the news that people want to hear, but play the trend, up or down. We're traders. We play the trend, and I'll see you in the next update.